This is a new reading in the 2024 curriculum for CFA Level 1. But it's not a new area. This is something that CFA charter holders have been involved for many years, especially in the area of equity research. I myself was an equity research analyst many years back, and now this has been brought into the curriculum because it is very useful in your practical life. So let's get into this reading and learn about research reports, how they are made, starting with understanding and determining the business model of a company that we are writing a research report on, further getting into how do you analyze the revenue of that company, how do you analyze the profitability, the investment required in working capital, as well as the investment required in fixed capital, and where that capital comes from in terms of equity versus debt. So, first of all, what is the purpose of this research, right? Why is this done? Why do we write research reports? So let's have a high level discussion first about the industry. And what I really want you to appreciate is the difference between sell side and buy side. Right? So let's get started with the high level discussion. These are companies which we also call issuers. Because why do we call them issuers? Because they issue securities, right? They are the ones issuing stocks, bonds. To raise capital, they sell securities. Then there are investors who invest in those securities. But between the issuers and the investors, there are financial intermediaries, right? And you can classify those financial intermediaries into two broad categories. You have your sell side and your buy side. Now, sell side will include investment banks, right? What do these guys do? They help these companies, these issuers, sell their securities to the buy side, to the investors. So they help them with making their financial model, financial projections, and preparing their prospectus, etc. Then you have your brokers, right? Securities brokers, who are also going to then work with these investment banks to sell these securities to your investors. Now, these research reports that we talk about are prepared by both investment banks and securities brokers at the sell side. The buy side also does research, right? The buy side also does research because they don't want to take the word of the sell side. Just because they are saying it, just because it's written in the report, they don't want to just take them as truthful people. They would like to verify themselves. So mutual funds, right? Lots of different types of funds, commercial banks who are also having deposit money, right? So banks, funds, you'll have insurance companies, etc. And there could be so many buy side participants who represent your investors. So you could have high net worth individuals, right? Even other types of investors that put their money in the hands of banks, or they get insurance company, or you could have pensioners, right? You could have pensioners who would then put their money in a pension fund, or they could be other type of funds that people can be investing in. So these guys, they do their own research before accepting which securities to buy. So research is happening on both sides. You'll have a research analyst working on the buy side, and you'll have a research analyst working on the sell side as well. But because here we'll be talking about reports, preparing reports, issuing reports with the perspective of trying to promote securities, our focus is more on the sell side, right? So either you're working for an investment bank or a securities broker and you're trying to sell a security like a stock or a bond of a company. So you're going to try and pitch that to the buy side, who can then buy it for either high net worth individuals or retail investors and so on and so forth. Right? So this is the larger picture over here. So now let's get into how we write these reports, how do we do the analysis, and what are the different types of reports, etc. So, what is this learning module going to cover? What are the elements of a company research report? How do you go about doing your analysis, starting with the company's business model, then getting into their revenue analysis, right? Do they have pricing power or not? How does that link to their profitability? How much money they need to have in working capital? How much they need to have in fixed capital? And where do they get that money from in terms of debt or equity? And two things I want to tell you. Please be very careful with this, because this is not just one reading. This is 3 readings, right? So the one that we're on right now, and then the 2 readings after this. So in the first reading that we are on right now, we're going to talk about the company analysis, past and present, where we talk about its business model, its revenue and revenue drivers. We'll also talk about pricing here, pricing power within this, right? In terms of revenue, what is the price at which we're getting that revenue? Then we'll get into operating profitability and working capital, and then fixed capital. Then in the next reading, we get into the industry analysis, and then in the last reading, we get into the forecasting of all of this. And there is a case study. There is a case study in your curriculum, a detailed case study in your curriculum. So this is the second thing I wanted to tell you about. The first thing is that these 3 readings are linked. The second thing I wanted to tell you is that there is a detailed case study in your curriculum, which you can also find in our notes. So we have presented that in the notes as well. You can read it directly from the curriculum. You can read it through the notes as well, but you should read it. But you should read it after you go through the videos for the 3 readings. So this is where you are right now. Please complete the videos for this first reading, complete the videos for the second reading. Well, it's not first, second, third, but right now the number is 5th, 6th, and 7th as per the current numbering of the 2024 equity readings sequence, right? So you're here now. Please complete the videos for this, then for this, then for this, and then go to the notes and read that detailed case study, or go to the curriculum if you want and read that detailed case study, because that detailed case study will really help you understand all the discussion. But before you jump into the case study, go through these videos and understand the theory so that you are able to appreciate that case study more. Right. So these research reports are written to examine a company's past, present, and forecast its future. Why would you want to do that? Well, because you know from your studies of equity that the intrinsic value of a stock is the present value of its future cash flows, right? So how are you going to figure out what are the future cash flows? So you need to forecast its future financial statements, and that's where you're going to get the future cash flows, right? First, you'll forecast the income statement, then you'll forecast the balance sheet, because based on the income statement, you'll figure out how much working capital needs will be there, how much fixed capital needs will be there, where that investment is going to come from. Then you will be able to make the forecasted balance sheet. And then once you have your forecasted balance sheet, you make your cash flow statement. And then once you make your cash flow statement, you know the future cash flows. And then using an appropriate discount rate, right, which is another discussion altogether, that what should be the appropriate discount rate depending on the risk of this business, you can discount them, and bring it back to the present value. So this is basically the high level discussion over here, that the whole point is for the report is to conclude it with a valuation that we feel the intrinsic value of this stock is $120. It's currently available in the market for $20. So we urge you to consider buying this stock, right? So this is what the sell side is trying to do. They're trying to explain to the buy side that, hey, look at this stock, it's for 20. We feel it's worth a lot more, so why don't you look into it? And if you want to buy it, please get in touch with us so we can make a commission selling it to you, right? So this is what's going on. Now the structure of the content and the tone can vary, right, depending on who's writing it, what's the purpose. We already talked about the sell side doing it for their clients, and this is usually very, very extensive if you are initiating the coverage. So usually what you'll see in the industry is that once you're initiating coverage, so you'll have like a sell side broker that is initiating coverage, which means this is the first report they are writing on that issuer. So you'll have a very detailed report if they're initiating coverage, but then later on they're just maintaining the coverage, so they just provide new information and whatever has changed in terms of the valuation. And we'll talk about this, right? With respect to the exhibit from the curriculum. So this is the exhibit for the initial report. This is the initial report, right? When you are initiating coverage, and this is going to be a long one. Now I know the size of this exhibit is small, so what I'll do is I'll break it up into two, right? I'll break it up into two. And let's zoom in into the first part, which is from here till here, and then we'll discuss that, and then we'll zoom into the second part, and then we'll discuss that as well. But before I jump into the first part, please keep in mind that this is an initial report, and this is designed for an audience who does not know a lot about this company. This is the first time you're initiating coverage on this company, and you're bringing it under your coverage. You're issuing the first report, and you would like to tell them about a lot of things such as the company description, industry overview. These things will be removed later on. Will be removed later, right? So when you will issue other reports later on, just as an update, so you will not be giving them the company description and the industry overview every time. You're just going to tell them, okay, this is the new information that has come in, and this is the update on our valuation because of that. But since this is the first report, here you're going to be telling them, okay, this is the company, the issuer, this is the ticker, right, that is there in the stock market for their stock. And right at the outset, you will tell them that, are we recommending a buy or hold or a sell, right? Even though this is something that's going to make sense at the end, that why you're saying buy it or why you're saying sell it. But we do start off the report with that what is our recommendation and what are the key reasons, right? So you can think of this sort of as an executive summary. And if the user of this report, the reader of this report is interested, well, then they can go into it. And if they're not interested, well, they will not go into it. So for example, if I am a hedge fund on the buy side, I am a hedge fund and I have a short bias, which means I only short sell stocks, I don't buy stocks. So if you're giving a buy holding, well, it doesn't really concern me because I don't buy stocks. I only sell them or short sell them. Now, if I'll see that you have recommended to sell this stock, now then I'll be interested, and then I'll want to know more about the company and the industry, right? So then we get to the part where we explain them about what is the company, what is their business, right? What is their strategy? And we'll give them details about the different product lines they're in, the geographies they're in, what's the breakup of the sales, the profit coming from each of those products, those different geographies, right? Overall, what's the size of the industry? Who are the other players? What are their market shares, right? What is the growth rate of the industry? Why the industry is growing if it is growing? And what is the future outlook, what it has been in the past and what's the future, what are the other forces, right? So in terms of what are the suppliers of this industry doing, what are the customers of this industry doing, are there any substitute products, what are they doing, right? Is there any new entrants expected to come into this industry? So this is apart from your existing competitors, right? So when we talk about industry size and market share trends, these are your existing competitors. But what Michael Porter said, very famous Harvard professor, is that, hey, your existing competitors are not your only competition. You have a total of 5 forces. So existing are one, but your suppliers can put pressure on your profit margin by asking for higher prices. Your customers can put pressure on your profit margin by asking for lower prices. There could be substitute products coming in that just replace you as a business, or there could be more companies coming in and increasing the competition you have, right? So you could have new entrants as well. And then we look at the industry not just from economic viewpoints in terms of price and cost, but also political viewpoints, right? Environmental viewpoints, and these could be related. Let's talk about. Let me give you an example. Let's talk about automobile companies like, let's say this company is Toyota, right? Now, existing competitors could be Honda, right? Ford, etc. Substitutes could be Tesla, right? Or rather, let me give you even a more interesting example. Let's say we're not talking about Toyota, we're talking about oil and gas company like, let's take a very interesting example. Let's say in India, you have this company called Reliance. It's one of the biggest companies in India. The owner, Mukesh Ambani, is one of the richest men in the world, and their core business has been oil refinery, right? So let's take this example. So, oil refinery, existing competition, whatever is there existing other oil refineries in India. Now, the supplier is Aramco, which is a Saudi oil exploration company. Now, if Aramco starts asking them for higher prices, then they can put pressure on their profitability, right? Or their customer is fuel stations networks like Indian Oil or Bharat Oil, which could ask them for lower prices and put pressure on their product, on their profit, right? Substitutes could be electric cars, right, which overall reduce the demand of oil, or there could be new entrants coming into the oil refinery business. So that is where your industry and your Porter's 5 forces become very relevant if you're thinking of investing in Reliance. Then let's move on to the pestle analysis, that political factors and environmental factors such as climate change and all these issues. So maybe government decides that, hey, no more selling of fossil fuel based cars. Everybody has to buy electric cars. So then your demand goes down, right? But then people say, oh, electric cars, the batteries are not that good. But then there's some technological breakthrough that suddenly the batteries become more effective and cheaper. So that could impact your business, right? Social factors could be there, that people become more conscious about pollution. There could be legal issues, regulatory issues, that the amount of pollution is what comes under discussion. Like, for example, oil refineries, you have deep conversion and you have hydro skimming. So the regulation could be hydro skimming has to close down because it's inefficient, too much pollution. Deep conversion is what you have to move to. So then this company will have to invest into deep conversion. So there could be so much that I could tell you, and that equity research analysts face in the market in reality, right? And there is a very, very good detailed case study in your curriculum, as I talked about, and it's there in our notes as well from the curriculum. So you can go through that. But first, go through the videos, right? Go through the videos for all 3 of these readings, 5, 6, and 7, and understand a high level, develop a high level understanding about what all this area is about, and then you can go through that case study so that your grip becomes more solid. And in reality, in practical life, you're going to have to probably either be on the sell side or buy side. So you will be dealing with all types of these multiple moving parts in every business that you might want to invest in, right? So then you evaluate that, okay, what is the company's position and what is their strategy within all of this entire chessboard. And then coming back to, so now let me just go back 2 slides and tell you where we are. So we've just discussed this first box, right? Now we're moving into the second box and we're still in the initial report stage. Okay, so now you've told them about the company and now you will start getting into the details about, okay, I have made a forecast of their financial model. I have come up with a projection of their revenue, their cost, their profit, and then eventually their future cash flows, right? And why I have come to these future cash flows, you can tell them what is your supporting discussion, anything that you need to support your projections with. And then based on those future cash flows, you come up with a value of the stock, that this is the present value of these future cash flows, and therefore I feel this stock is worth $120 per share. Currently it's for $20 per share, so it could be a 5x for you if you want to get it from here, and more than 5x actually. Then you could tell them what are the risks before, well, of course there are ESG considerations. And one thing I would like to say here is that in a lot of countries, we don't have very good corporate governance, right? So if you are investing or if you are asking your investors to invest in a company which is listed in a relatively low corporate governance environment, so there could be a lot of fraud. And even though the company might be very profitable, they might not share that profitability with their minority shareholders. So that's where these ESG factors become very important. It's not just about environmental, it's not just about social, that they might be doing child labor or something like that, or they might be having pollution, but also the governance factors are very important. That who are the owners, right? Who are the owners, and are they having a history of taking money from shareholders and then just paying themselves high salaries, or and then that's where the executive composition becomes important, or are they genuinely using that money to grow their business and then return money to the shareholders? So this is also very important, right? And then finally, you have to tell them about the risks, that okay, this is the target price you have come up with. These are your assumptions in terms of the scenario and sensitivity analysis, but the scenarios could be very different than what you have thought, right? And what is the difference between scenario and sensitivity? So scenario is multiple factors. Let's say, for example, you thought that multiple variables. So that, let's say in your analysis, you have assumed oil price to be around $50. You have assumed that interest rates will stay around 4%, right? So this is a scenario. Or sensitivity is one variable, but extreme values of one variable. Now, the reality could be much different. So you need to tell them that, okay, what could be the downside risk? That it could not go to 120, maybe it will just go to 40. Well, still, it's all right, right? Or what could be the upside risk, that it could be much more than that. So this is what you tell them, that what are the risks in your analysis. Right. Now, the subsequent research reports will be much shorter than the initial one, because the people who are your users, your readers, are already familiar with the company, right? So they just need an update now on the new information. And this brings us to the second part of the exhibit in the curriculum, that now the front matter and recommendation is still the same, but we've removed that whole company information and industry information, and we are jumping directly into the analysis of the new information, right? So what new information has come to light and how does that impact your valuation and risk? That's it. So this is an update. Right, I think let's take a break here, and then we'll come back and we'll talk about how do you actually go about making this research report, right? So you start with analyzing and determining the business model of the firm. But let's do that after a short break.